How do you know when your QuickBooks Online file is truly ready to hand off to your tax accountant? Today we are wrapping things up and doing one last review. Most business owners forget to review and reconcile their balance sheet before they hand things off, which affects the profit and loss and throws off your taxes entirely. If you know exactly what to look at, review, and double check, you can be sure that your tax accountant is filing your taxes correctly. Hello, C Squared Collective, and welcome back to the final episode in our series, Plan, Close, Grow. This series focuses on helping you plan for tax time, close your books and complete year-end tasks, and grow your business or nonprofit with clean, accurate financials. If this is your first time joining us, welcome on in. Each episode is designed to stand out on its own and give you practical, actionable tips on the topic at hand. But if you would like to dive deeper, be sure to check out the rest of the series linked in the description below, as well as the rest of our videos. As always, if you have questions, drop them in the comments or reach out to us directly at connect@c2accounting.net to schedule one-on-one support. So grab your beverage. Today I have a lavender coffee, and let's get started. Before we can get started on the review, let's make sure that we've done all the basics. You've already collected all of your receipts and put in all of your transactions. We've chatted previously about the best way to do your mileage and home office expenses in a video in the series, so you've already made those decisions and assembled that information for your accountant. And finally, you've made sure that all of your loans are split correctly, taking out the interest expense and the principal, and made sure that is correct and reconciled. So gather all your bank and credit card statements, and let's get to our reconcile and review phase. Before we can review the P&L, which, if you're new here, is accountant speak for the profit and loss, which is one of the things that your tax accountant needs, we need to make sure that all of the transactions on that report are correct. In order to do that, your balance sheet needs to be reconciled. If you've been reconciling your bank and credit card accounts every month, this will help save you some time here. It is our recommendation to stay up to date on this, or if you need help, this is a service that we do offer. Let's first talk about setting up the report that we need. In your QuickBooks Online file, go to Reports and then Standard Reports. QuickBooks automatically saves some of our standard reports as favorites, but it will always be in the Business Overview section. Click on Balance Sheet. Let's get our settings at the top ready here. So the report period should be last year or last fiscal year if you have a different one set up in settings. Verify these dates. Then verify that cash or accrual for your business is correct. You don't need to do anything in the display columns by section. And then finally, to make things easier to reconcile, we want to click into the Compare to drop down and select both previous year and dollar change. Before we break this report down, let me show you how to save it and where to find all your saved reports in case you need to break up your work time. On the right, click Save As. Rename the report to something that makes sense, like balance sheet and then last year or the fiscal year, whichever you choose on your report period. Then, if you like being organized and use the custom reports a lot, you can add it to a group, such as one named Taxes. Now, when you go to Reports, instead, we are going to click Custom Reports and scroll down until you find your saved one. Okay, now we are set up and good to go. For our balance sheet, we are going to play my favorite game in order to reconcile. Real or not real? Here's what you are looking for in general. Does this make sense in real life? Does it match what I can prove with my statements or records? Does anything look off compared to last year? And is there anything that sticks out like a sore thumb and is a mistake? So now let's walk down the balance sheet like a checklist. Let's start with our assets. We have our bank accounts. So these are going to be your checking, savings, any credit unions, etc. The bank accounts that show up here are the ones that you've connected to QBO and a cash bank. These must be reconciled through December 31st or the end of your fiscal year using your bank statements. If you haven't done this yet, this is your first step. If you need help doing this, this is a service that our company provides. I personally use the balance sheet like a checklist and go down all of my bank accounts. Now, this isn't a video on how to reconcile, but we're going to briefly touch on how to do that. If you would like an in-depth video on reconciling and what to look for, let us know in the comments section. Now to reconcile, we're going to go to Apps, and then Accounting, and then select Reconcile. In the drop-down, type in the bank that you would like to reconcile. Then look for the last statement ending date to verify that it has been reconciled through your tax period. If you need to reconcile further, and then enter your bank statement ending balance and the ending balance date and click Start Reconciling. Then, once you're on the reconciliation screen, your goal is to make sure all transactions match with your statement. If the difference is 0 and the deposits and the payments match, and every transaction is checked, then you can click Finish Now. The only exceptions are a check written or a deposit that has not cleared yet. If there is anything else hanging out in here, there might be something wrong. Now let's talk about the cash bank account, or sometimes it's called petty cash or your cash drawer. You will notice that in the bank account section that there's typically a cash bank. You can't reconcile cash on hand to a bank statement the same way, but it still does need to be reconciled. If your balance sheet says that you have $3,000 in cash, then check your record of cash count from the same day to officially reconcile. If the amounts are different, then you may be missing some cash expenses that didn't get entered into QBO. If not, you are going to now need to find your receipts, identify what it was used for, and record the transactions manually in QuickBooks to clear it up before handoff. We recommend counting cash and making sure it matches the QB balance periodically and always at the end of the year. Now, let's talk about accounts receivable. If you are on accrual-based banking, the accounts receivable matters on your balance sheet. You can run an AR aging detail or the AR aging summary reports as of 12/31. If you don't use accrual accounting, we still recommend doing this at the end of the year, as it's a great time to clean up any outstanding invoices or track down money that you are owed. Now let's play our quick game. Real or not real? Do these customers actually owe you money? Are there old invoices sitting here that should have been paid off, written off, or corrected? Make sure there aren't any payments without invoices, so AR should be invoices, not payments. And if the accounts receivable isn't real, your income might not be real either, so we want to make sure that we catch them here. Next is inventory. If you track inventory, remember inventory is an asset, and it should reflect a snapshot, your inventory value at year end. The value should be recorded as what you paid for it, not what you sold it for. So we're talking retail price. If you don't track inventory throughout the year, you should do this as a year-end count valuation and share that with your tax accountant. The key is your inventory count valuation should match the QB inventory value. Your tax accountant can help make an adjustment as needed. This is also a service that we assist with. Now, let's talk about payroll prepaid assets, if applicable for you, if your company does payroll. If you use the QuickBooks Payroll, there is a new QB tax holding account that shows the amounts that you've paid for in payroll taxes that are being held to pay taxing authorities later. The question is, does this match what is truly owed and is scheduled to be paid? If not, flag it for review. Now let's talk about undeposited funds, if this is applicable for you. This should match to the payments received in QB at the end of tax year, but it hasn't been deposited yet in your bank account by that same date. If this does not match, flag it for review later. Now let's move on to your fixed assets. Fixed assets stay on your balance sheet until they are sold or disposed of. So all you need to do here is look at the change from last year. If it is increased, then confirm that you either bought equipment, furniture, computer, machineries. Your accountant will need all of the details for this purchase. Our common rule of thumb questions here, was it something that cost more than $2,500? That number often comes from the IRS de minimis safe harbor threshold used by many small businesses, but the right treatment depends on your situation and your accountant's approach. So make sure you chat with them. Now, if it is decreased, you have sold or disposed of an asset. If you see an asset on the list that you've sold, traded in, or disposed of, but it still shows a value year end, Then be sure to let your tax accountant know about the sale with a date and the amount sold for. The goal here is simple. Do you still have this asset? Yes. Great. No? Tell your tax accountant. Now, you may not see this on most balance sheets, but if you deal with security deposits at all, they will also be here. Security deposits are a sneaky one. If you see an asset, just double check. Is that deposit still out there and refundable? If not, it needs to be addressed. Let's move on to the liabilities. So first up is accounts payable. Again, this is if you are on accrual. If you use AP, run an AP aging detail as of 12/31. If you are not accrual, we still recommend doing this to clean up your books and make sure that you have paid everybody. Then we're playing our favorite game again. Real or not real? Do you truly owe these vendors? Are there any duplicate bills? Are there bills that were paid outside of QuickBooks that you never marked as paid? And are there checks still sitting in AP? So this is a mistake that's often made. AP should all be bills, not checks. Now let's move on to credit cards. Credit cards should be reconciled to statements just like bank accounts. So follow the same steps that we talked about in the bank account section and play our real or not real game. Again, there should be nothing hanging out in the reconciliation area. Now we're moving on to sales tax payable. If you collect sales tax at all, your sales tax payable should reflect what you've accrued but haven't paid yet as of December 31st. So ask, does this match my year-end filings? Does it reflect the last period that wasn't paid yet? Do the payments I made in January line up with what I owed? Now let's talk about loans. So this is our long-term liabilities. Loans should always match your loan statement. The principal balance and the year's activity should be properly split between interest and principal. If you need help here, we've got a full video on loans, how to split transactions, and how to reconcile that. So go watch that one after this. Now let's look at equity. In equity, you'll usually see owner's contributions or capital, owner's draws or distributions, retained earning, and net income. There's a couple big checkpoints here. Owner's contributions. Click into here and double check that it matches everything that you have contributed throughout the year. Owner's draw or distributions. Again, click in here and double check that they are real and consistent. So scan through your owner's pay and distributions and ask, are these truly personal withdrawals? And double check that things weren't accidentally coded as owner draw when they're a business expense or vice versa. Retained earnings is essentially what the business has accumulated from prior years, and it should generally tie back to the year's prior tax return. Only now that our balance sheet has been fully reviewed and reconciled are we reviewing the profit and loss statement. So now that things are reconciled and believable, we're going to go to reports and profit and loss. Again, this is where we need to check our settings and we can set up custom reports to make things much easier. Much like the balance sheet, we're going to look at the top here. So the report period again should be last year or last fiscal year if you have a different one, and verify those dates. Then double check your cash or accrual. And again, you don't need anything in the displays column by section. And to make things easier to reconcile, we want to click in the compare to drop down and select previous year. And then we're going to this time want both percent and dollar change. As with the balance sheet, you can save that for later. So make sure you follow those instructions to save things if you want a custom report for later. We're going to do 2 quick reviews now that our profit and loss is set up. So first, we're going to compare to last year. We're going to look for big swings, so double check all the way through the profit and loss, comparing and looking at that dollar amount, and ask yourself, did revenue grow or drop for a clear reason? And did an expense category explode, and do I know why that happened? Now we're going to just quickly scan for any miscoded items. So some common weirdness are supplies showing up in a category that doesn't make sense, meals, travel, or equipment that were dumped into miscellaneous. We actually recommend not using the miscellaneous category at all. It's a great habit to have because it makes this a lot easier. Then any large one-time purchases that are buried in normal monthly expenses that should maybe be on your balance sheet or maybe got miscoded. And double check your income and expense parked in uncategorized. So here your goal is not perfection, your goal is very clean, reasonable, and supportable. Now that you have done all of these steps, let's go through a checklist to know that we are ready to hand off your QBO file. All bank and credit cards accounts are reconciled through the 31st or end of fiscal year. Your cash on hand is counted and reconciled. Your inventory, if applicable, is accounted for at year end. Your AP and AR, if applicable, are reviewed and done our little game, real or not real. Your fixed assets make sense, and all changes are understood and sent over to your tax accountant. Undeposited funds have been reviewed. Sales tax payable matches what is truly owed. Your loans match your statements and are reconciled. And then your P&L has been compared to last year and doesn't have anything really weird on it. And any additional things like mileage or home office information has also been gathered. If you would like our free printable checklist of these items, head on over to our blog post linked in the description below to download. If you followed this process, you are not just handing off numbers, you're handing off a file that is rooted in reality and ready for taxes. At C Squared, this is what we mean by plan, close, grow. You plan by keeping everything reconciled and accurate. You close by having these accurate books to pass off to your tax accountant. And you grow from accurate financial insight, taxes, and setting yourself up with good habits to benefit yourself for the next tax season. We have a new series coming up next. It is called Spring Cleaning Your Finances, Planting Seeds for Better Financial Habits. This series is a practical guide to cleaning up your books, planting better financial habits, and preparing your business for smoother taxes next year. If you have any questions, drop them in the comments below. We are very happy to help. And if you need help with handing off your books to your tax accountant, this is a service we provide. Reach out to us through an inquiry on our website or send an email to connect@c2accounting.net. And if you would like to see more content like this, be sure to check out our other social channels. I've included those links as well as the link to our website in the description. Thank you again so much for watching, and remember, stay learning so that you can be rooted in wisdom and grow with care.